All right, happy Thursday. Thanks for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Always a pleasure to visit with you about our ag commodity markets. Well, today being Thursday, that means USDA came out with their weekly export sales data this morning. Let's take a look at what the numbers are and let's run through them with you. On the corn, we had 65,900 tons sold last week. Under 100,000 tons. Well, obviously, that includes some reductions, and we'll talk about that in a little bit. Soybeans, the net total was 471,800 tons. On soy meal, we had 267,600. Soy oil actually went backwards a little bit, had a net reduction of, 200 tons. And the wheat, 234,800 tons. Let's look at grain sorghum and cotton and rice, too. On the grain sorghum, we sold 65,400 tons last week. Upland cotton, 511,200 running bales. That's a pretty big total. And the rice, 27,400 tons. Here to talk about our trade, and we'll go ahead and take a look at last night's trade, too, with Brian Hoops, the president of Midwest Market Solutions. He joins us right now. All right, Brian, I do want to recap what took place in the overnight trade here. So let's run through these markets here. Kind of tentative, but as it is, I call this WASDE Eve. You know, the traders just kind of biding their time the way it seems ahead of the report coming out tomorrow. So overnight, let's take a look at the corn board. Our quotes are from bar chart, and we were weaker. July down 4 1/4 at exactly $6 per bushel this morning. And December finished 7 lower at 523 3/4. Now on the soybeans overnight, we had the July contract 1/4 cent lower at 13.60 and November was down 4 1/4 at 11.74 1/4. I will mention that these continued trading through the release of the weekly export sales numbers, at least for a few minutes. So it could have a little impact on these closes here. Now in the wheat in Chicago, you had July up 2.5 cents this morning at 6.19 1/4. In Kansas City, July, we were 5 1/4 higher at 7.93 1/4. That was off of its overnight low by 11 cents. It got within about 3 cents or so of its high of the overnight trade. Spring wheat trade in Minneapolis had July at 8.04 3/4. Look at that. It was up 10 3/4 overnight. And our cotton market had July trade of 85.60. That was up 59 points overnight. And we have December up 57 points. So let's talk with Brian Hoops about this here. On those weekly export sales numbers, can you get much guidance from them today, or is the trade looking elsewhere?
Yeah, good morning, Marlon. They're disappointing for sure. You know, you look at the new crop corn number, it's a net reduction from last week. Not a major surprise, but certainly a disappointment. So you're not going to get much help if you're bullish out of these export numbers. The old crop corn and soybean pace is really not close to where we need to be to reach the USDA forecast. Kind of gives a little support to the theory that the USDA could lower exports for both corn and soybeans in tomorrow's report. Wheat sales, you know, off to this new marketing season aren't too bad. But they're still running behind last year's pace. And probably the biggest takeaway is if you look at new crop sales of corn, soybeans, and wheat this year for 23-24, compare it to last year, which was a poor marketing season. We're much slower this year than what we were last year, and so it's going to be difficult to make that ground up, especially when Brazil is exporting a record large crop of corn and soybeans during the summer months here. It's just going to be very, very difficult to make any ground up, and it really puts pressure on the yields this year to have some sort of yield loss. That's really where the bullishness needs to come from. Someone has to have a yield loss this year if we're going to see much higher prices, because demand is slow. And if we have, you know, a decent crop, not even a record large crop, just an average type crop, we're going to have a case where we're building any stocks of corn and soybeans. And so tomorrow, if you look ahead to that report, there's not a lot to be super bullish about. If you use logic and common sense, you probably could say the wheat belt has had some decent rains over the last month. They could increase wheat yields, but by the same token, if you're using that same logic, you probably should say the USDA needs to lower corn yields a little bit. But the question is, will they? They've never changed soy soybean yields in the June report, but they have changed corn yields a few times. And so this may be one year where we get that type of a change or that type of a news item. But going into it, it looks a little bit on the negative side with some rain in the forecast.
Okay, well, Brian, we'll take a break and come back and we'll look at the beef and pork export numbers as well right after this. All right, as I mentioned, we have beef and pork export sales reported this morning by USDA. Let's see what they are. On the beef side, 12,800 tons. The pork, 25,500 tons. If you look back at last week, that beef number is down 29% from last week. The pork number is actually up about 13% from last week. Let's go back to Brian Hoops and talk about that a little bit. How noteworthy is that when it comes to direction for the trade today? Yeah,
Marlon, probably not going to give us. Yeah, we're probably not going to get much direction out of these export numbers. I think they're kind of disappointing, but we're looking at what cash is doing out in the country, out in the plains. We really haven't had much cash cattle trade yet, but boy, it's on fire on a dress basis in Nebraska. Up to $300 has been reported. Now, I've heard some rumors of $304 being paid, but you're looking at $10 to $12 higher, most cases of cash sales on a dress basis. So the futures market, had some hedging pressure, some profit taking yesterday, and we probably could see a little follow through because we are overbought. But boy, this cash market is red hot, and the June futures should stay very close to where the cash market is. These other contracts can kind of anticipate where that cash is going to be by the summer months, and these high-priced cash that they're paying now will turn into retail sales probably around the 4th of July, and that could slow some demand down after that time frame.
I saw the same thing on the wire this morning that there may have been some up around 304, 304 and a half or something like that yesterday. Phenomenal prices. Let's look at the board, how we finished up yesterday. We had that big turnaround to the downside yesterday. We had the August contract after a high of 178.10. It finished at 173.20 yesterday, and it got as low as 172.60. What a wide range it had. So it wrapped up the day down $2.30. So it'll be interesting to see what it wants to do this morning. On the feeder cattle market yesterday, wow. August had a high of 245.17, a low of 238.55, and then it closed at 239.10, pretty close to the low of the day. It was down a whopping $4.15. And on lean hogs yesterday, we wrapped up the session with the July contract $1.40 lower at 86.92. So, Christina, again, thanks, Brian, for all the help this morning.